And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and TGIM. Happy Monday, everybody. February the 7th. I'm John Hoagland, and this is the Market Forecast. Thanks again for trusting me with your time. Sorry about that. I had a little bit of a technical issue here this morning. Got it figured out, and we are off and running. I hope you had a nice and restful weekend. As always, we're going to be seeking context, good risk management, and always remembering patience. Looking at what we've got coming at us this week, we don't have a lot of economic numbers due out. As a matter of fact, it's a pretty quiet week as far as that's concerned. Today, a couple of short-term bill auctions. That's about it. We've got international trading goods tomorrow, petroleum status report on Wednesday, CPI and jobless claims, the busiest day this week, and then nat gas on Thursday, and consumer sentiment on Friday. So not a lot of economic numbers due out this week. Kind of interesting, and markets are going to be able to do some digestion. Probably going to be focusing a little bit on some of the earnings that are due out. It is a busy week in earnings, although nothing huge is due out this week. A lot of folks keeping their eyes on Peloton, as we have Amazon and Nike considering a bid for the struggling fitness company. As far as earnings today, we had Tyson Foods and Hasbro, both of them beating expectations. We're looking at ANZ Banking and Amgen after the close. Kind of a shorter list today, but lots due out throughout the week again. Crude prices remain above $90, even though there was no real major disruptions in Texas due to the cold weather last week. So we are going to be starting off here holding above $90, but kind of an inside trading hours, extended trading hours day. We're going to see that in the charts very shortly here. As always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling are always welcome. A quick look at the VIX, the dollar index, and the 10-year yield before the open here. VIX up about 1.5% at 23.60. Dollar index up again 95.50, and the 10-year yield continuing to leak higher at 1.92%. Last I checked. As always, got to say good morning to everybody. Christo, good morning. You are the first one in the room. You win the prize. Scott saw and conquered. Frederico, good morning. Miguel, Zoraine, Charles, Robert, Brian, Denny, David, hey, good vibes to you as well. Terry, Theo, Deanna, good morning. Kevin, Jeff, Vince, good morning. Bill, Jeff, David, Andre, Equanimous, Spencer, good morning. Eric, Three Lines Insight, Ronald, good to see you. Ryan, Galen, Sarah, good morning. Spencer, here I am, finally, right? Chris, good morning. Got it ready to make some money. Good, I hope so. Jimmy, Chris, a thoughtful and patient week, hopefully. Devont, Ray, good morning. All right, Isaac, Spencer, Manuel Caesar, George, David, and Expediter Dean. Haven't seen you for a while, Expediter Dean. I remember that name. Slamak, good morning. Dead letter opener, AB, Robert S., Mike, and Shaw. Good morning to everybody. All right. Again, sorry, I apologize for my technical issue here this morning. I'm a little bit under weather here this morning, so I'm going to be really patient. Mondays are typically not my best days anyway. I'm going to be very patient this morning. Why don't we go ahead and jump in and see what we're seeing on the charts here? As always, we're going to start with the daily in crude. We'll watch the opening range and we're going to start with the daily in the S&Ps. Then we'll watch the opening range in crude oil and move on from there. Again, happy Monday. We are lucky to get back to our passions here today, so let's have a look. Okay, here's the daily in the S&Ps. We find our heroes, the S&P and the Nasdaq, kind of creating some bull flags, perhaps. I mean, the market has come up to them. Largely, we're off our highs here. It's not like we've come off a big move to the upside here and started to create a bull flag. So I'm not really sure how much I buy this. It seems to have found some balance, at least. We've got inside extended trading in our range today, I should say. Open interest, we lost 1,000 yesterday, so Friday, I should say, so largely moot, but on a little bit higher volume. Excuse me a second. And on a little bit higher volume. Here's the bull flag that we see potentially forming and may give us some opportunity. Here's the 30-minute chart. So here's that bull flag that is potentially forming. Settlement is here, 44.92.50. Put that on your charts. We opened here. We're currently trading there. So there's no real overnight inventory to kind of look for to catch an opportunity. We're opening basically inside range and inside value, which does suggest patience. I'll be watching to catch the extremes. There's two extremes that I see here. There's the bull flag extremes, and then I see an extreme down here with these lows, and certainly I see an extreme up here at the highs. So if we do manage to break out above this trend line, this double top here, these two highs here, might be a point of contention for continuation. Now, reminder, there's no real important data that known out this week. So, there is a tendency for our equities, when there is no bad news, for them to just continue the grind to the upside. We don't know what headline risks lie out there for us, and there's always that possibility. So you maintain good risk management, of course. Use stops. Let's go see what's going on with the crude oil now. We've got about 1 minute here before the open. So we were talking over the last couple of weeks about the need for new business to come in and push prices above this area of balance. We had a breakout above the bull flag. We had some more consolidation here. Volume wasn't that great, but we started to increase open interest and at higher levels. So the market is appearing to be somewhat healthy in the upside momentum and the upside movement here, with a little bit more open interest. We had 17,000 increase in open interest estimated on Friday, so the money still seems to be coming in. No harm in Texas of the weather that they were fearing down there. The Iran sanctions also continue to be something of a point of contention with pricing in crude oil. Let's take a look at the 30-minute, and we'll watch the open if we see any really good opportunities. It looks like we've had some overnight shorts that have now reconciled back to settlement, back to basically past where the overnight started, which was right here. So any overnight inventory we're going to be counting on is now moot. We had some overnight shorts. That is now gone. Where we were going to be opening with a gap, that is also now gone. So we're going to be opening in range and in value, which, what does it tell us? it tells us no real change in the perception of value here. Stay patient. Settlement 92.31. Let's watch the opening range here in a couple of minutes. So it looks like we're getting a little bit of a push to the downside off that. And just that move back to settlement off the overnight shorts. Those overnight shorts are taking buying power away from the marketplace in a very short time frame, of course. It looks like the market may be heading towards. We've got a pretty sizable opening range here already. We're looking at almost 28 ticks. That's a pretty sizable opening range. Makes it somewhat inhibitive to take that risk. We got about 5 seconds left here. Say the opening range is the first minute of the day. The opening range can provide some pretty good opportunities if it remains one extreme or the other. Okay, we've taken a look outside that opening range to the short side here, but I'm not sure that it's necessarily a good idea because we are in range, we are in value. I'm not touching it today. It's too big, and again, being in range and in value. In range, in value was the open, right at settlement. Not a big change in the perception of value. It doesn't mean that it's not going to be a good opportunity. It just means it's going to be a little riskier for us to take. All right, so here's the Nasdaq. Similar situation as the S&Ps. Largely kind of falling into balance. We got an inside extended trading hour range. We've got a bull flag getting set up. If that is the case, then we may be already breaking out the bull flag in the Nasdaq. We had a 2,000 contract increase in open interest on Friday. No big deal. Volume was higher on a lower range though. So does that mean that the market is good to the downside or to the upside? It doesn't really mean that much in the greater context of things right now. Here's the 30-minute chart. 1, 2. So we've got a couple of points of contact here. This doesn't really seem to be holding all that well in the S&P, in the Nasdaq. As a matter of fact, last night this line was relatively supportive. Does that give us license to look for opportunity to the upside? It may. Ocean blue opening range in crude oil and the nat gas is 8 o'clock central. 8 o'clock central. S&Ps and Nasdaq 8:30 central to 8:31. Just to make sure you're clear. Hey, my brother Rick is here. Love you, Rick. How's it going, buddy? Good to see you, Ocean Blue. I haven't seen you in a while. Nicholas, Columbus. Yes. Okay. So it appears as though we, are spending time above this trend line. Does that give us license to look for longs there? It might. It might. The bull flag, no important releases this week. Remember, with the lack of important releases, the equities tend to have a float to the upside. Most of traders are buying stocks, not shorting stocks. So we got to remember that. With no new information, no new bad news, we may just see the equities grind back to the upside today. And again, they're starting the week largely in balance. Keep that in mind. How about gold? All right, we got a jump in volume the last couple of days. Open interest continues to slide, however. So with the jump in volume, no increase in open interest. We lost 1,400, as a matter of fact, on Friday. Market just continues to kind of fight its way along this trend line here now. In what appears to be a potential bear flag, but it seems a little bit buoyant for that. Um, it's kind of boring. Here, hang on. Let's see what the 30 looks like. So we didn't open with a gap. If we did, we've closed it. We're in a previous gap that remains unclosed. We have last week's high in play. No real weekly kickoff levels in the neighborhood till we get up here. Boof. Overnight longs close the gap. If these longs don't find what they're looking for, there is that opportunity for the price to come back towards where we started the session here down here. But if we do see some continuation, we see some buyers being incited to come up and close this gap, that could be something also an opportunity for us. It's a tough day today. Maybe it's a little bit me, but I'm not seeing really clear, good opportunities, and I'm a little bit foggy. As you can tell, I'm a little bit under the weather. So here we go. Into the euro. Volume and open interest has slowed as we've gotten closer to higher levels here. Weekly kickoff high is in play. That level is 1475. For 176, 1467 half is our overnight high. We're still in a interior extended trading hour range here. Overnight inventory was long to mixed. It is now reconciled. It's been very difficult for this market to spend any time outside of value from Friday. We lost 600, which is largely just a moot number for the euro. We just seem to be kind of testing up here, and this area up here looks to be kind of a high target area. We've got a naked point of control. We've got weekly kickoff high. We've got last week's high. This looks like an area there where there's likely to be some opportunity, and I'm going to try and stay patient to see if we can get to that level before really getting too involved here. Again, the market opening in range and in value. Very little sign of a change in the perception of value of the euro. Be patient. Look for best opportunities or better opportunities as the day goes on. The 10-year. Downside volume, good, especially on Friday. We added 18,000 in open interest, so money continues to come into the downside here as rates continue to leak higher. Bond yields, bond prices continue to push lower. We know what's ahead of us. We know that there's some rate hikes coming. It just makes it, it doesn't make it any easier to find the good opportunities, to find the right trades here in our treasuries. I'm going to be looking to continue to look for strength to sell, again, because we know rates are headed higher. It doesn't make it any easier. Take a look at the 30-minute chart. Here's Friday, adding 18,000 in open interest. No, that's not what we're looking for here. Here's the 10-year. There it is. Pow. So we have this, big dive on Friday morning, falling into balance. Weekly low right there. Weekly kickoff low right down there. That level 126.16. And overnight, we're relatively mixed. I don't think that we've got any real big overnight inventory either direction. And again, we are opening in range and inside of value. So that suggests to me starting to stay patient and looking for better trade locations as the day goes on. Perhaps after the initial balance is established, which is the first hour of trade, focusing on those extremes could be really a good way to limit risk as well as to look for opportunities. Well, as long as we're in range and in value, we're going to be focusing on those extremes. The market has, found balance on Friday, found balance overnight, is still in that balance now. Balance rules are in play until otherwise proven wrong. Net gas. Here's the daily. We got another weekend gap here. We know we had an island top last week. We added 2,600 in open interest to the downside on Friday, which put in our weekly low. Our weekly low now resistant to us in the session so far today. We got volume kind of dropping on this move to the downside here on greater open interest. This is a little bit iffy here. As far as the health of the downside auction, you're going to want to see some greater volume if we continue to move lower. If not, there may be an indication that the move doesn't have the power behind it. Remember, the volume is the driver, is the gauge of how good an auction is doing. This downside auction isn't proving to be very good as far as volume is concerned, but of course, open interest, it's killing it. So weekly kickoff low, last week's low, interesting areas for an opportunity. Okay. Here's our weekend gap. It's a previous gap that we have not quite filled yet. Last week's low, weekly kickoff low. The question about what is a naked point of control. A naked point of control is, a point of control is a profile term. It's the highest volume, single price in volume profile. In market profile, it's the widest line of TPOs closest to the center of the range. More on that later. Yes, it's a point of control that has not been retouched. Thank you, Ocean Blue. Good question, Joe. Excuse me. My goodness. So here's the 30-minute chart. Oh, my goodness. Weekend gap. Overnight inventory mixed. Remember, the overnight, it doesn't start at settlement. It starts where the overnight starts. So we don't really have any overnight inventory with which to work with here. So we're going to be trying to, I guess, looking to stay a little bit patient. Maybe we can get some opportunities down here near weekly kickoff low, which is a naked point of control. Maybe there's opportunity up here near last week's low, which we've already seen a little bit of resistance up in that level. The market is out of balance. It is offering bigger opportunities. It's going to be a little tougher to find those important levels. So be careful. I would be focusing on weekly kickoff and last week's low for opportunities. It is Monday, and typically not my favorite trading day. So glad everybody is back. We're always, great to be happy. It's Monday. It's kind of strange to say. We do enjoy our time off, but we are passionate about what we do, and it's always good to get back to the markets. Deanna, thank you very much. Excellent. I'm glad that you found those very helpful. And all of you, appreciate you coming, and look for more information and opportunities to have some more time looking at some good classes there. So yeah, I think the best thing for me to do is to kind of back off a little bit today. I'm just obviously not doing the best as far as that cold is concerned. So I'm probably going to get some orange juice and crawl back in bed. There will not be a group coaching, or well, I'm hoping there's going to be a recap this afternoon. I had another appointment today later on, so that was already planned, and I do apologize, but I will look forward to hopefully seeing you back here tomorrow morning for the market forecast. Get out there and trade well today. Be patient, take your time. You know, the most important thing is that we're all here tomorrow. Got to be here tomorrow. So take it easy, trade well, find some opportunities to take some profits, accept what the market gives you. Not a lot of new information due out in the market this week, something to keep in mind. I'm going to take my deep breath. That feels good. Stay humble, grateful, and creative today. Get out there and find some profits today. Take it easy. Patience pays. I'm probably not going to see you in the pit in 5 or 10 minutes here. I'm probably just going to relax a little bit today. So, again, looking forward to your success. Have a great day.